Hello, friends. How are you doing? I hope you are doing a good job in your business and the students are doing a good job in their studies. Now we are seeing these pricing strategies. We're going to see, and there are three classifications we want to make. One is pricing strategies for retail traders. Then pricing strategies for manufacturing concerns, and pricing strategies for service sectors. Okay, these are the we divided into three. So we'll see individually how they are going to fix the price. Actually, listen carefully. I think it will be of great help to you. I hope you will understand what I'm going to say in this. Watch carefully. So the retail traders actually they have to the emphasis first value actually. Value is more important more than the pricing because the concept has changed. The people look for the value. What value I get from this product? What the additional features I am going to get? So the price has come a little down, and then value has come up. So little traders should deal in such goods which will bring great value to the customers. Okay, so there are some features. For example, there is a sofa we have, available. I have seen in the some of the malls. And then once you sofa is for sitting comforts only. But thing is, the moment somebody comes and you want to stretch out, so you can just stretch it out as a cot. You can sleep on it. So people are prepared to see the value, what the benefits it gives, what the additional satisfaction we derive. So that is a great value to us. Okay, instead of just but those days we used to have only sofas. Now the sofas can become even bed also. Sofa come bed. So you need to go here and there, but just by buying this type of sofa set, when guests come, they can just sleep inside. You can just stretch it out, make it a bed, and you can sleep comfortably. You can save space and you can have comforts. Guests can be taken care of. Like this, everything have some value. So people, customers look for value. So you try to give in your retail those products which gives a great value. Price is not the only thing. The value, the benefit, satisfaction they derive from buying the product is counts more than the price. Even they are even prepared to pay a little more also because of value they derive, because of the satisfaction they derive. For example, you see there are some cough syrups are being sold. It is they written there no sugar. So diabetes patients can take comfortably cough syrup. So it will not affect the diabetes, and it will cure your cough also. Like this, the value additions, extra benefits. It derives the customer great satisfaction by buying their product. So they look. So you should, when you are introducing such value products, please explain in some way or other to your customers. This is the benefits this have. So instead of buying this, you buy this. So you should tell that this is more better than this. So it is very people are expecting like this today. So okay. So with the introduction, this for this retail business. So I'm going to dwell on this. So selling goods or service for more than it costs, as far as telling you, more than the price, more than the cost. Okay. And difference between the year we are going to how they are arriving the prices. Okay, we are going to see how they are going to arrive the prices. So they will have the markup. Retail people have the markup. What is markup? Markup we call as margin. Markup we call as gross profit, gross margin. It's called markup. So the how it has been arrived, let us see. This is actually cost. Cost plus margin, markup is equal to sales price. Supposing you are telling your shirt cost 15 rupees. Okay, let us say. Then you plan to sell it at 25 rupees. So what is the cost? Cost is 15. Okay, cost is 15. Then what is the sales price? 25. Okay. Now what is the margin? What is the markup? 10. Okay. So 15 is the cost. Okay. 25 is the selling price. But markup is in between. This is called gross margin, gross profit, or margin markup. So all remain the same. It is a gross thing, not the net thing. So it is a gross margin. Okay, 10. So 15 plus 10 equals 25. So now you can, if you calculate the percentage of this margin on your retail price. Okay, let us say the 10 rupees is the markup. Okay, markup means you are putting it above the cost, above the cost. Okay, then 10 divided by 25 into 100 equals 40%. So margin is, if you convert it to the sales retail selling price, it comes to 40% cost profit margin. Okay, if you give a percentage of markup on cost equal to 66.67. Okay, so this is the difference. So you have to see how you have to fix it up. So 15 plus 10 equal to 25. So 25, 15 is the cost, 25 is the selling price. So markup is equal to 10. So 40% on retail price, selling price 40%. The 10 is 66 point on cost. So cost, this is very important. The cost, this includes not only the price charged by the wholesaler. So you want to buy from the wholesaler, no. It is not only that includes the cost given by the wholesaler, but it includes other expenses like carriage inwards, bringing it until reaching your destination. You have to pay some wages, you have to pay transportation charges, all incidental expenses, all will be added, and it comes around the 15. You understand? This is not the price charged by wholesaler. It includes, besides the price by wholesaler, it includes all other incidental expenses. So then plus mark over this 10, 25. Okay. So this is very important. So our cost includes not only wholesale price, but also incidental expenses incurred for like transportation, etc. Okay. So this is called mark up. So you are going to mark up over above the cost price charged by the wholesaler and other expenses. Okay. So this is the markup. This is how you retailer charge it. Okay. So in the example, I was telling 15 rupees is the cost. So 10 rupees is the 25 is the sales price. So markup is equal to sales minus cost equal to 10. Okay. So cost plus margin equal to sales price. Okay. So this is very important. So this is the retail method of charging the prices to the customers. Okay. Now, supposing you have the financial plan. Now, I think probably you understood this. Okay. Now, if you are giving the financial plan to bankers or to your own satisfaction, you have drawn the estimates. You call it estimates. You call the estimate and you arrive at the net profit. Okay, this is net profit. But you want to start how to price the products, So what happens is the sales you would have known with the financial estimates, then you would have known the net profit also. So what you have to arrive at the initial markup, the initial gross profit margin. How you are going to arrive? It's all the average of all the products. Because there when you are giving estimate, you are not going by the product wise, you are giving overall estimate, overall sales, overall profit, overall operating expenses, etc. So you arrive at the average only. So at least it give an idea how much mark you can charge on the products that you are going to sell, you are going to receive, you are going to start the business, you are going to sell. Okay. So how to do it then? Again, there's a formula here, the initial markup equal to operating expenses plus profit. If they are giving any discount, add to it. Then net sales, all the sales plus reductions. Then you will get the average markup. That is means irrespective of the goods, irrespective of the variety of goods, average on all the products. You got the point now? So suppose we can go like this. So let us take a hypothetical example. I think probably you got the point, so I can rub it off. Yeah, this is okay. So now let us say I'm working it out. People who are starting initial markup. At least you must know what is the markup you have to charge on all the goods. You should have a rough idea at least, and then later on you can change it to specific goods and different markups for different type of goods. Okay, now it's more on an idea how much you are going to mark. So, for example, let us say you got a 20 lakhs sales. Sales is 20 lakhs. Okay. Now the profit you just charged 40,000. This is actually net profit you're going to give charge 40. They given the discount of they given another 20,000. The wholesaler has given some 10 reduction. You had to it 20. Okay. So initial markup is equal to operating expenses. Operating expenses will be more than that. So this is profit. They get the reduction. The operating expenses. The expenses all operating includes what includes depreciation, salaries, rent, and all those things. This is all not kind of directly with the product bringing in. It is other expenses you have to do, staff salary and depreciation for the building, furniture, and the rent you have to pay, and so on. So this is the thing. So let us say that it comes around, let us say around 4 lakhs. Okay, 4 lakhs. So operating expense is 4 lakhs. So how do you have to calculate initial markup? So operating expenses 4 lakhs plus profit 40,000 plus reductions, discount they are giving 20,000. Okay, divided by 20 lakh sales plus reductions. Reductions always 20,000. This is a lot of discount. Okay, even ignore it. Okay, no problem. So 4,60,000 divided by 20 lakhs 20,000. Okay, into 100. So almost there comes now. This is 220, roughly 25%. Okay, this is initial markup. This is called initial markup on average. Okay, so you got the point. So this is for people, at least those who are initially starting and they're giving estimating and estimating the thing and profit they are going to make, average, etc. So this is the initial markup. So you have to charge markup is at least 25%. Okay, this is roughly your example I'm telling you. It will not be like that. So it is how you have to do it. So how you have to do what the this is there operating expenses plus profit plus discounts. Okay, then gross net sales plus reductions. So therefore, 4,60,000 divided by 20 lakhs 20,000 into 100. So 25% is the initial markup. Okay, this is the thing you are going to arrive. So there are again I'm telling you there is a standard markup. Standard markup means for all goods you are going to mark up the same thing for all. Standard markup. Okay, then again another thing is coming is the flexible markup means according to the goods type of goods varieties you are going to charge different markup. Markup on socks, men's socks, cannot be compared with markup on refrigerators. You understand that? Markup on socks for men cannot be compared, is not compatible with the markup on refrigerators. They're different. So their volume, their cost, everything matters. So accordingly, you have to charge a different flexible markup for different type of goods and services. You arrive at the prices. Okay, now got the point. So accordingly, you try to do it. Okay, this is the one thing. Then again, this is what I told you. But will it cover cost and your desired profit? This is the good question. Will it cover the cost and the profit margin you want to earn? It is okay. Then it's very important. Okay, this is called will it cover cost and desired profit? Very important. So you try to do this also. Then again, three things you have to see. Whether it is acceptable, I already written there, whether it's acceptable within the price range. Supposing you have some idea, it will be 20 to 30%. So it is becoming under this category, or it is not more than that. Because you see, profit margin depends on the local customers. So you're going to deal with the local customers. So you have to know the demography and their income, the etc. Supposing in your family, supposing in your locality where most of the people are working, husband and wife both are working, then you can charge little more. But if you are looking in a locality where people earning is very low, or like slums, etc., where poor people are residing, you can't afford to charge high margin. So accordingly, you have to change. Okay, that is one thing. Second thing is compare with the competitors. Competitors is competitors. So competitors, you have to at least you should be in a position to at least match with the competitors' prices. You can't increase it. At the same time, you can't bring it too low. Too low means there's again people will think that it is some cheap quality. I can't go for it like that. So be very careful. So accordingly, what a competitor, because people have to come. Supposing competitor located nearby, then you have to match with the competitors. But supposing competitor is usually far away, the people have to go all the way from here to there 2 to 3 kilometers. Then they don't mind paying little more because they can save the time, they can save the transport costs, etc. Accordingly, you decide the price. Okay. Then third thing is again customers willing to pay. That's what I was telling you. Value. Customer thinks that his price is okay, I can pay because the goods are good. It offers a great value. So it's very important. So try to understand this markup concept, retail traders, and try to scrutinize all these three things which you have to see before selling to the customers. Okay, this is called markup. So now I'll be going next thing. I will be going to dealing on markdown and other things you have to see. That is, we'll see other sessions also. What is a markdown? What are the other things to be seen? It is coming under the same detail category only. So till such time, all the best. Thank you.